In this video, I'm going to review some of the trade alerts that we posted here at Stock Market Guides as part of our option trade alerts service. On my screen right now are trade alerts where the full trade has been completed as of today. This video is being filmed on June the 12th, and you can see here these are all trades that where the trade setup ended today. And you can see it shows here what was the exact option that was in the trade alert, what was the price of the option at the time that we posted the trade alert, and what was the price of the option at the time that it was scheduled to close. And this shows what was the return on the actual option itself. And for this particular day, you can see these trades that just finished, they all turned out really well. Not every day is like this. You can see here that we have 4, 5, 6 winners, all kind of double-digit percentage returns, and just 2 losers, and they're in the single-digit percentage. And that's a solid day right there. They're not all like that though. There's definitely going to be days, where there's more losers than winners as well. And the idea is over time to put the odds in your favor of making a solid profit. It doesn't mean every single day is going to be filled with winners, that's for sure. It's a journey. So this particular day turned out well, but it is a journey. There's going to be twists and turns along the way. But when it's all said and done, our goal is to give you information that educates you in a way that might put the odds in your favor over time to make a solid profit. Okay, so let's take a look at a couple of these. So I wanted to look at this one for IMO first. This one turned out with a solid profit here. And let's just take a look at the exact trade. So it called for an entry back on May 29th. And this is a stock chart here for IMO. And each candle represents 1 day of price activity. And this is the day when it called for an entry. So it was somewhere in here. And you can see here, as I said earlier, it closed today. It was scheduled to close at the opening bell today. And you can see the opening bell price is right here. And so it's pretty clear why this one turned out profitably. You can just see that the direction that the underlying stock price went is clearly upward. And that really powered the option there. So that one turned out to be solid. You can see that along the way, it really peaked early. And the trade alert itself did not call for an exit here. Our trade alerts are very formulaic. They're rules-based. And it just simply called for an entry here and an exit at the opening bell of this particular date. So you can follow in lockstep with the trade alert itself if you just want to kind of stay right in line with our researched, back-tested approach. But we're not claiming that for any given trade, the way to get the maximum profit out of it is to follow that approach. We're saying historically over time with that approach, there's evidence that it was a strong, profitable trade setup following that approach. But along the way, you're certainly welcome to use discretion. So for example, after this thing had this huge jump right here, maybe you would have considered locking in profits right there. Or maybe you would have had the discretion or the intuition to realize to go for it right here and to lock it in right here. A lot of traders just follow the rules because it's simple. It takes the discretion out of it. It takes the analysis out of it. But the bottom line is you can make whatever decision you want. If you choose to follow the trade in the first place, then once you're in it, you can decide whatever you want about when to exit the trade. Okay, so that's IMO. That one clearly turned out well. I wanted to look at EEM because I thought this one was kind of interesting, and it shows something about these option trades. So here's EEM. This one also called for an entry on May the 29th. And so this one called for an entry. Here's May the 29th. So it called for an entry right here. And I'm just going to double check. Yeah, this was right at the opening bell here. And so right at the opening bell. So basically right there, that's where the entry was. It said, okay, we sent a trade alert. It said this is a trade setup that has a back-tested edge. And so if you had entered right here, and then the exit was today at the opening bell, which is right here, you'll notice that the actual underlying stock EEM the price is up a little bit between here and here. So you'll notice, this is just a little bit lower than the entry price right here, meaning that the underlying stock actually would have had a little bit above break even. It would have been a minor profit. But you'll notice here that the actual option itself took a loss. And the reason for that is because options have extrinsic value. And so an example of that is the time premium that you pay for when you buy an option. And that time premium, it evaporates, you could say, as time elapses, and certainly once you get to expiration, it's gone. And so that extrinsic value, it's almost like a premium you're paying to have the privilege of owning an option. And so if the underlying stock does nothing from the time you buy the option until expiration, then whatever that extrinsic value is, that's basically going to be gone. And so that will be the amount that you would lose even if the underlying stock breaks even. And so we purposely choose options that have a minimal amount of that extrinsic value because we want to minimize the cost associated with that time premium. But there is still some, and so even in this case, EEM went up just a little bit, the underlying stock, but yet the option ended up with a loss. And it's part of the nature of options trading. So that's it. That is a review of some of our trade alerts here. If you have any questions about our service or just about the market, you can always contact us. Our email address is support@stockmarketguides.com.